Hello and good morning and good evening to you, Brian. Um, so the sound's not coming through. Oh, I think you're on mute.
Let's try that again. Any better?
Perfect.
How's it
Yeah,
going,
yeah.
Andy? How's everything been?
Yeah, good, good. How have you been?
I've been great. I think it's been what, 2 months since we last chatted about
It
the
has been
markets,
2 months.
so
It
long
has been
overdue.
2 months. Yeah, definitely, definitely. I think yeah, that's right. Last month we didn't have it. And it was a break for everyone.
Hmm.
So yeah, so good to see you.
Yeah, great to see you as well. The markets have obviously been a little more negative since we last chatted, but
They
overall, I
have
think
the
we're at least starting to see some positive notes here. So we'll go over that a little and um,
yeah.
talk a little about just how it's correlating with the S&P and what we can expect these final 2.5 months of the year.
Awesome, awesome. Let's jump into that. So before that, I'll just welcome everyone. Good morning, good evening, good afternoon, and good evening to you wherever you are tuning in from the world. Today is Thursday, the 13th of October. Hope everyone's staying safe and doing well and having a good time. So as usual, we have our special guest, Brian Quinlivan from Sentiment. He is indeed a special guest because he only comes on once a month, and he shares with us the latest and greatest and what's happening in the market with his analysis on chain data as well as sentiment analysis on social media, which is what the sentiment platform provides. So those of you tuning in, look, feel free to share, like, don't forget to subscribe. If you're in YouTube, if you're tuning in from YouTube, just click on the bell icon, choose all. That way, you will always be notified whenever we go live or when we come on. Uh, if you're on the other social media platforms, follow us. Don't forget to tag your friends, right? Because they might be interested. All right, so Brian, I'll hand it over to you to do a bit of an intro of yourself, and then we'll jump straight into it.
Yeah, absolutely. I'll share my screen while I chat here. My name is Brian. I've been with Santiment for about 3 years now. I've been covering the markets and sort of helped create some new models for alpha purposes for traders out there. And I'm constantly trying to innovate based on Santiment's excellent metrics to figure out exactly how we can make it easier and easier for traders out there to predict what's coming next using all of the public on-chain and social data that we have available. Um, and I think Andy, you and I have been chatting for almost a year now on these biweekly or monthly calls. And throughout the year, it's been mostly bad news, obviously, since I started here. But um, I think, as we have progressed with a lot of the recession news and inflation fears, things have started to look a little better. So we can start to go over that a little bit here. I want to make sure you can share see my screen okay. Is it coming in okay on your side?
Yep, yep, it's on, looking good.
Okay, perfecto. So this right here that I'm showing, this is a screener that essentially shows the price percentage changes, the social volume changes, and then the overall individual growth or retracement bars here in terms of raw price data, sorted by market cap. So you can see Bitcoin here at negative 14% over the last 30 days. Ethereum a whopping negative 23%. We haven't spoken since the merge happened, but the merge had some very polarizing reactions to it. It initially went up, followed by a pretty sizable crash down, got down, I think, right around 1200 or slightly below before bouncing. And it's kind of been hovering in the low 1300s, staying out rather boring, to be honest, for the past week. Um, but it's staying within a tight range alongside Bitcoin. But that isn't stopping a lot of assets from making their own paths right now. We can see that XRP is up 37%, Quant up 47%, Huobi token up 58%, and Maker up 28%. These are a few of the notables among the top 100 assets in crypto. over the past 30 days. So if you've been heavily invested and allocated part of your portfolio to one of those four, you're not as unhappy as the rest of the crypto traders out there right now. But for the vast majority of hodlers and traders, it's been a rough time here in September and October after what was looking like a promising rebound from late July all the way up until mid-August. And right around mid-August, we saw a change. And part of the reason for that change is this right here. And we've talked about this in our previous calls, Andy, the FOMC meetings, and of course the CPI data as well. But I'm sure this is something you've covered with your audience a little bit. The FOMC meetings are essentially the meetings where the Fed decides whether or not they're going to raise interest rates. And for those who don't remember, in 2020 and 2021, the Fed was busy shrinking interest rates down to 0% to allow businesses and people to survive on what was a very scary time with so many COVID fears. And now that a lot of those COVID fears have dissipated, they are pushing the interest rates back up and causing they're basically combating inflation with these interest rates, and it's causing the dollar to rise a lot. And with the dollar rising, Bitcoin, gold, silver, equities, they've all been feeling the burn from that. And I'm curious what your take is on this, Andy.
Yeah, so I think it's interesting because if you look at what caused inflation, I mean, right now it's a they're trying to use monetary policy, right, with the increase in interest rates to battle a supply sided inflation, right?
Right.
Because of all the lockdowns around the world, manufacturers couldn't get stuff out, the logistics guys couldn't send them out in time, so there's a global shortage of stuff. I don't, our demands probably haven't gone up that much. It's just that even though it's remained constant, but then you now have less supply, then inflation blows up as price finds and the equilibrium. The inflation, the CPI, right? The inflation rate is also measured year on year. So because most of this year we've had it, pretty high, right? Like it's what, 8% or bouncing thereabouts.
Yeah.
I'm pretty sure by January when they compare, January 2023 and January 2022, even though it's still at 8 something or 7 something, they would more than likely hit their target of 2%. So that's kind of our take, and also I think they released recently that they're changing how the CPI is calculated from September onwards.
Mm-hmm.
So that's gonna help with them meeting their targets. So really, yeah, that's kind of where we see it coming from. Hey, Brian, before you switch screens, the screen before
Yeah, I
where
was
you were
just setting that
showing the
up for later, but you're
yeah.
probably wanted to talk about the final two FOMC meetings right here, right?
No. The one before this one, where you were showing the tree graph and uh,
Oh, the
the
screener. Got it.
yeah, this one. Could you tell our audience who are interested, how would they get to this screen?
Yeah, so if you go to app.santiment.net and you simply hover over the left panel right here, you'll see all of these pop out. They're basically all of the old templates that we've used, which we share on our Twitter here. And you can also see the Explorer, the several dashboards, watch list, various charts you can open, set alerts, and of course right here is the screener. So clicking on the
Ah,
screener, this opens right up. And then under infographics, I just enabled the price tree map, social volume tree map, and price bar chart. This price tree map is basically showing the proportion of the asset amongst the top 100 and whether it's up or down. Obviously, unless you're XRP and a few of these other assets I mentioned, it's looking pretty red. The stable coins are, of course, neutral, but you can also see, the same price perspective here on a horizontal axis, and then the social volume changes, how much discussion an asset is having in these previous 30 days compared to the 30 days before it. So for the vast majority, they're starting to get less and less talk as more and more people in crypto jump out. And then the few assets that are doing well, XRP being one of them, they almost doubled in discussion rate compared to the 30 days prior. So that's no coincidence.
Cool. Cool. Thanks for sharing that, Brian.
Yeah,
So yeah,
absolutely.
back to you.
Of course, yeah. And I mean, going back to the federalreserve.gov website here to show when the remaining FOMC meetings are, we can see that we have one coming up on November 1st to 2nd. That's about 3 weeks away. And then a month and a half after that is the final one on the 13th to 14th. Now, a lot of people are expecting that these may be the final two interest rate hikes for at least some time. They want to go into 2023 with less of a hawkish perspective and more neutral, where they can react and read based on how markets are fluctuating. Obviously, markets have gotten pretty hammered. The S&P 500 is down right now pretty significantly, and if you look right here, full screen that, the S&P is highlighted here in teal. You can see it really topped out at the very end of the year of 2021. And since that time, if I just hold down shift right here and drag, you'll see in the top left, this bubble here shows what the percentage difference is. And yeah, the S&P's dropped about 24% since that time. Bitcoin down 59%, gold down 6.3%. So no matter what you've been in, at least amongst these three major sectors, you haven't been doing too hot. And a lot of the reason that people are attributing this downfall is because of the Fed's hawkish stance trying to combat inflation at the expense of a lot of these market caps and people's investments kind of going down the gutter.
Yeah, yeah. If you've been in, especially if you've been in tech stocks, that wouldn't have been
Absolutely.
too great either. Yeah.
Yeah, the American ones, Facebook, Apple, Amazon, Netflix, Google, they all got pretty whacked throughout the
Yeah.
first half, especially of 2022. Some have rebounded. Netflix is doing a little bit better. I think I've seen Amazon start to creep up again. Facebook slash Meta, they're still struggling a lot. So, you look to those five and you can really get a good perspective of where tech stocks are at any given time.
Yep. Yep. Cool. So, we were talking about inflation earlier, and we're saying that, I was saying that, we think that the Fed would probably hit their targets because when you compare year on year, the rate of increase wouldn't have been that great, and
Hmm.
if they hit their 2% target, um, then great, right? All is well. But what's interesting is if, say, item X was $100, and in January this year, 2022, and then and it's gone up from $50. By 2023 January, even though you hit that 2% rate, that 2% inflation rate, because it's year on year, it's still going to hover around the $100 mark, right? It's not
Right.
gonna, yeah, it's not gonna go back down to 50. But that target of 2% inflation rate, it would have been met. So things will still cost, relatively expensive compared to where it came from, but they would still hit that inflation rate.
Right.
So yeah,
Yeah, I mean, I agree with all of that. And another thing that I'm watching closely is the dollar's price. It's at, I think, a decades long high right now in terms of the dollar value, as other international currencies are really dropping significantly. And that means there might be a little bit too much overcorrection going on by the Fed, which may cause them to think twice when it comes to raising the rates these final two times of the year. They may still do it down the road, but they may not have anticipated that the dollar would jump up quite this much and the stocks would fall this much. And that's what a lot of people are waiting for. And I had prepared this graph right here, which shows the big moments in which people discuss the FOMC here in blue and the CPI report here in red. And you can see the CPI reports especially, they tend to coincide with a lot of bottoms, not always by any means. Like this one, for example, prices fell off a cliff right afterwards. But you can see right here, the CPI report, when people were talking about it back in May, big jump. When people are talking about it in mid-July, this marked a bottom here. This marked a slight bottom here in mid-August. And then finally, this one was interesting. The price was falling and it kind of happened in tandem with it. So if nothing else, based on this small sample size, you got maybe a 60% chance of the CPI report being good news, and 40% of it being not so good. Either way, you can pretty much rely upon CPI being a volatility marker whenever you see a huge spike here. And you can expect that there can be some good buy opportunities or good take profit opportunities based on that. But we have been ranging. It feels like we continue to drop down, but no, we actually, as far as Bitcoin goes, we aren't as low as we were back in mid-June when it really bottomed out. And we've kind of just been chopping up and down in this range between 17.5K up to about 21.5K, pretty much for about almost 4 months now. And a lot of people are getting impatient with that. And you can see that visually if I put in an asterisk in our search bar here and give it just a moment to load. And it's going to show the overall amount of discussion rate throughout the past 6 months here. You can see how much people are talking about buying the dip here in late April. And that was a relative dip. Everyone thought this was a dip back when we were at 40K. And now people would love for Bitcoin to be back at 40K.
Yeah.
And gradually, you can see these bars just continue to tick down, especially right here. There was a big drop off right at the end of August, and it stayed very low ever since. So a lot of people have essentially given up on crypto, which is typically what you want to see if you're a patient hodler, waiting out a bear cycle before things get better.
Yeah, that's actually very interesting data there, where it just falls off the cliff from the end of August.
Yeah, it's quite fascinating when you see a big drop like that, and you can see
Yeah.
pretty much on all three of the major platforms. Telegram, the big drop occurred back in early June. With Reddit, it's been a lot more gradual, just less and less people on the cryptocurrency, crypto markets subreddits. Twitter, I'm not quite sure what this spike was about 10 days ago, but it appeared to be an anomaly. And overall, you're seeing a bit of a shrinking amount of discussion, maybe a slight rise over the past 2-3 weeks here. So that could be good news. But, especially Telegram, which is known for being a little more anonymous and full of shill groups. Once people decided there is not as much opportunity to scam people or to, perform pump and dump groups in an unpredictable market where everything is just dropping, Telegram just sort of dried up quickly. And I'm sure when the bull cycle begins, whenever that is, you'll see things immediately pick back up on Telegram again.
Pretty sure they will. Pretty sure they will.
Yeah.
Yeah.
And then another thing that's very interesting, we shared this earlier today on Twitter, the amount of mentions of bull, bullish, buy, buying, or bought here in blue. And then in red, we have bear, bearish, sell, selling, or sold, all combined. So we've got 5 positive words representing the blue, 5 negative words representing the red. And this really illustrates how the opposite outcome tends to occur from the crowd's expectation. Let me take off the shared axis. So now we're just looking at the highs versus lows for both respective. And you can see here in red, this is where a lot of bearish calls were happening. There's generally, you can see like maybe 40% less negative comments compared to positive. So when you see the red actually up there with the blue, that means that overall the crowd's probably pretty bearish. And you can see right here it was actually above. Um, so a lot of people were really just saying, you got to get out of crypto here. And sure enough, that marked the bottom, and we immediately saw a rebound. And then when there was a slight dip, everyone said, okay, now you got to start buying. You can see these tall positive bars, and
Mhm.
the opposite came true. And we continued to drop and drop. We continued all the way up until just yesterday, where we started seeing a lot of positivity again. Things dropped one more time, and then we started to get a lack of commentary. So just disinterest overall. And now prices kind of flattened out a little bit for now. But that was kind of the story over the past week. People got negative and things bounced. People got positive and then got tricked and things dropped more. And that's really a microcosm of how crypto cycles work in terms of sentiment and how the crowd tends to get fooled.
That's interesting, isn't it? Like the opposite of what the crowd sentiment is happens.
Totally.
Yeah,
It's
yeah.
absolutely fascinating how that always tends to work out. Now, by no means is it a perfect science. There are times where the crowd can get it right, but more often than not, they get it wrong. Um, yeah,
Yeah,
sorry, go ahead,
that's
Andy.
no, that's really I just wanted to share, 2 weeks ago, I was actually in Singapore to attend the Token 2049 conference.
Nice.
It blew my mind. Like, there were,
Did it?
it was close to 7,000 people that attended, and, like, and the prick that I mean, the tickets weren't cheap. It was, 1,000 US for the cheapest one. Sorry,
Hmm.
that's the early bird. And then the VIPs were sold out. That was like $5,000, US dollars, for a ticket. And when I was there, it was, I was asking myself, what bear market? Like, there
Right.
was, yeah, the buzz, the energy. Like, there was, um, definitely a lot of, institutional players,
Oh
as
yeah.
well at the conference. So it's yeah, it was good to see. It was good to see that sort of energy, and that, crypto. Whilst people have sort of taken their attention away from crypto, the industry is still buzzing. It is still, everyone's still building and everyone's still working, and so it's interesting to see. I mean, and then, to overlay that with sentiment analysis, it's almost, the retail crowd versus the institutional crowd, and what one group does or says versus, the other. That's quite, that was what popped into my head when I was watching
Yeah.
that data, or that you were presented before, because, do we have the majority of the retail guys, saying it's a bull or bear, or lose interest, and then are the institutional guys doing the opposite of that?
Hmm.
That's interesting to observe.
Yeah, and I'm curious, Andy, how was the overall turnout there? Did it feel empty? Did it feel like the expectation of people matched reality?
Oh, it was like the energy was high. It was buzzing. It definitely did not
So
feel
interesting.
empty. It definitely
Yeah.
didn't feel empty. There were, the big names were there. The big brands were there. Google was there. Amazon was there. It was it was the opposite of what a bear market looks like.
Right. Yeah, and so that's kind of a bittersweet outcome because ideally you actually want to see a lot of people giving up and not showing up to these kinds of conferences. I remember going to one in early 2018, mid 2018,
Oh
about
yeah.
6 months after the big bull market, which then had Bitcoin get up to like 19.8K. And then it really just dropped off a cliff and was back at like, I don't know, 8,000, 9,000 or so. So a lot of people just thought that the 2017 big bull market was a fluke and we're not that into crypto anymore. And this time
Yeah.
around, a lot of people who've been in crypto for 5+ years, they're more accepting that this is a cycle, and they're not that fearful of, prices going too much further. So it's interesting.
It is, yeah, it is quite interesting. And I have to say, I think I saw more representation from the institutional crowd than I did from the retail crowd at the conference.
Hmm.
Yeah,
Yeah, that makes
yeah,
sense. And we could
yeah,
look too at how the whales are looking, because institutions are likely going to be in this very high category of um, you know 100 to 10,000 Bitcoin, because there are a lot of hedge funds, things like that. Whereas the more retail traders, you might see anywhere between zero point 0.1 up to 10, maybe. That might even be ambitious, but let's see how it looks. And look at how they've intersected. I'll put the actual price of Bitcoin on here so we can visualize who's been more correct. I'll make it a little darker, put it in bar form. And now check this out. So a lot of these institutions, as I said, they're going to be represented by the red line here. And look at how much the price of Bitcoin has followed the amount of supply held by these large institutions versus the smaller retail traders who are holding, more modest amounts. And the retail traders essentially buying it from the institutions, and they're almost mirroring each other fairly identically. And that mirroring has not
yeah,
stopped.
yeah, yeah. That is that's uncanny, isn't it?
Quite cool,
Wow.
right? So we could even
Yeah,
back it up to like the last 3 years, and they basically started mirroring um, more or less 6, 7 months after Black Thursday, after the initial COVID fears started. And
yeah,
you can see how high whales spiked,
yeah,
more sharks and whatever you would call them, guppies, they dropped off. And then
yeah,
they kind of went up in unison here. So they caused this final bull rally. And
yeah,
then beginning in late October 2021, the whales just said, okay, we're good here up at 65K plus. We're going to begin taking profit. And
yeah.
they did so big time and got
Hmm.
out as the prices were just falling off a cliff. And the retail traders are just scooping it up, hoping that they're buying the dip successfully right now.
Yeah. Oh, that's interesting. That, yeah, yeah. Well, I guess in a way it's great for Bitcoin because now you have more adoption.
Hmm.
You've got, because you always start with buying a little bit, just taking just a bit.
Right.
But yeah, you can see how the whales or the price actually hugs, um, you know, where the whales are, what the whales are doing, whether they go up or
Yeah,
come down. Yeah.
exactly. Even going back to like right before Black Thursday, whales probably were getting a little head start because they were hearing rumors about COVID, and they started taking a ton of profit. And then price started recovering right as whales began getting confident again. And you can just see how much, the whales kind of get ahead of big turnarounds in price. So the big question is this something right here? We saw it one other
Mm,
time right here in early August where they were accumulating just a little bit, but
hmm.
this is an even sharper rise. So we could be seeing something good if they continue to rise. I can zoom in really quick. And yeah, you can see that since September 28th, I'm holding down shift so you can look at the top left part of my screen, and you can see that they've accumulated back. It looks like about 0.22% of Bitcoin supply, which is actually tens of millions of dollars, I believe. It's a ton.
Wow.
I think it might even be
Yeah.
hundreds of millions.
Yeah.
And that's about a 0.5% accumulation collectively from how much they held just
Yeah.
about 2 weeks ago up until now. So that's something right there. And even
Yeah.
the retail traders, like they've been ticking up too. This is the highest that they've been.
Hmm.
Um, what was it? If we go back to like 2016, yeah, like the as far as the zero point 0.1 to 10 Bitcoin addresses.
Yeah.
This is, yeah, by far the most they've ever held, getting close to 15%.
I like that chart.
It's
It
pretty
shows,
pretty nice. Yeah,
yeah, yeah, yeah. It also shows adoption of Bitcoin
it does.
over over time, and that's nice. That's nice to see.
Yeah, and we have this too. This actually shows the raw amount of addresses that are in Bitcoin. So you can see there aren't any existing addresses that are over a million or more, but there are some beginning with 100,000 Bitcoin to a million. And there are 5 in existence right now. You can see that they zigzag quite a bit. And I can guarantee you that most, if not all, are somewhat exchange related. There could be
Yep.
someone who's secretly holding a private Bitcoin address. Maybe Satoshi is actually out there with a 500,000 Bitcoin wallet, but who knows? That's the thing. It's very
Yeah.
difficult to identify what they are. But you can see how it's fluctuated back and forth. And if you go down to 10,000 to 100,000, this is where the bulk of exchange addresses are. And yeah, there's about 94 of them at the moment. And then this begins the institutions like the really large whales, and they're holding about. Here, let me zoom in a little. It's doing decimals because we're looking at like a decade plus. So let's just look at like the last year.
Yeah.
So here
Yeah.
we go. So 10,000 to 100,000, there's 95 known addresses. Um, the orange line here, there's 22,034. So these are still like the elite of elite addresses. And then here's where you start seeing a lot. 100 to 1,000, there are actually 13.8K known addresses. And they've actually been climbing. They're starting to recover after dropping off after the bull market. They're
Yeah.
starting to recover. Maybe a
Yeah.
slight dip right here that's a little bit concerning. But
Mhm.
overall, since February, they're up. There are more
Mm.
addresses than there used to be. Look at here, I'll get rid of all of these now. So just look at the 10 to 100, how much that's grown.
Oh
There are
yeah.
now 135,000 or so after
Hmm.
being down at 129. So that's an extra 6,000 or so addresses, 1 to 10. And you'll see all of these small ones just consistently grow, whether it's a bull market or bear market,
Yeah.
because there are always more and more of the micro addresses. Interesting that
Yeah.
you see a slight dip in the super tiny ones. That means it's a lot of weak hands that
Yeah.
are basically just getting the last, 5 to I don't know, $150 out of their wallets and you know
Yeah.
cashing out to
Yeah.
their banks, whatever it is.
Yeah. Those were probably people that doubted it, but then everyone around them was talking about Bitcoin, so they probably
Yep,
wanted to dip their toes in it, but they weren't too sure. And then when the market tanked, they're like, "All right, that's it. I'm out of here."
exactly, exactly. You can see, I mean, right here too. You can tell. I don't even have to overlay price. This was the end of the 2017 bull market.
Mm,
Um, this was the big April all-time high where it got up above 65K, and then it flattened out. And then around October, November, that's when things started to go sky high and the FOMO began one more time
yeah,
before things really prices dropped right here. And then you start to see them flatten out again. So when the
yeah,
newbies stop creating these micro addresses, that's when you can tell that people are getting fearful.
yeah, yeah, yeah. But overall, it's encouraging to see the 1 to 10s, right?
Yes.
Growing over time. That's quite encouraging. That's very, yeah. It just means
Yeah.
that that there's more adoption. I guess that's the theme. There's more and more people who may have been on the sidelines, and when it was at 69,000, they thought, ah, that's it, I'm too late. Hey, now
Hmm.
that it's at what, 19, might be worth taking a bite from. So maybe those guys are thinking, hey, there's a 70% discount now
Right.
from where it was. So yeah, so maybe those guys were cashed up and waiting on the sidelines for this to happen.
Exactly. And 1 to 10 Bitcoin holders, those are serious traders in most cases. These are people who likely have some savings, not necessarily. Some people may have all their savings in their 3 Bitcoin. You never know. But most people here could be considered the beginning of the smart money, right?
Yeah.
Because they've got 5 figures of savings in USD at least, or whatever currency you have. It's enough for you to live off of for a while. So
Yeah.
people are keeping a close eye on prices and news once you get to the red level and above.
Yeah. Yeah. So
So,
that's interesting to see. And also with all the, turmoil around the world,
of
you know,
course.
they might see that as the most mobile asset class they could have on them.
Oh, absolutely. Absolutely. You can also see here visually, like the amount of the amount of sentiment compared to the average. Anything over this zero line, that means that people are pretty euphoric toward Bitcoin, and you can see that that's exactly what we saw in October through the week of the all-time high in mid-November, before all of the people who were excited about the dropping prices initially because they thought they were buying the dip, they eventually started to get a little fearful. Um, and once they got fearful, especially around here where we
Hmm.
saw some negative sentiment for about 7 8 weeks straight, that's when
Hmm.
prices actually grew. There was a little bit of a dip, and then everyone says it's time to buy the dip, folks, get back in. They turn out to be wrong, and then everyone gets negative again. And we saw right here the price just continued to plummet due to a lot
Yeah.
of really bad recession news and FOMC um, bumping up
Yeah.
interest rates. So eventually we had so much negativity that at least things have been flattening out now. And if things are going to drop more, it's likely going to be because we start seeing a whole bunch of positivity again. So as long as things stay negative, that's going to be one of those encouraging signs that I alluded to.
Yeah. 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 No, that's good to see. Hey, Brian, it's been great catching up.
Yeah.
Yeah, I think we've hit we've hit our time,
Yeah, I think
and
we squeezed in some good topics here for sure. Hopefully, this is helpful for your audience, and it's always a pleasure to catch up with you and just talk about what's going on in the world and crypto.
yeah, definitely, definitely. It's always great to catch up with you, Brian, and it's and it's great for the audience with the type of analysis that you just showed, the type of data that's actually available on the sentiment platform, that you can actually make data driven decisions, rather
Hmm.
than kind of just go with your gut feel. It's always
Hmm.
good to be data driven. All right,
Absolutely, and
Brian.
we also have that Equities Tracker coupon that has been used by your community before. And if you guys want to give it a shot and just start a trial, look at some of the charts that I'm showing. It's very good value and can seriously help you with your investment decisions. So I highly recommend it.
Definitely, definitely. We're gonna have to come up with a class to go through how to navigate the sentiment
I
platform, because
know.
it's
No, we should do that. I'll do
we
like a
should
full hour in one of these upcoming calls and just do a full tutorial if you'd like.
yeah, we should definitely do that.
Yeah.
All right, well, Brian, time for dinner.
About that time, yeah. It's always crazy to think about how it's early morning and I'm already starting to get ready to get my PJs on over here. So
Well, you have a great evening. It was great catching up with you. It's been 2 months since we
I
last caught
know,
up.
I
Yeah,
know.
so I'll catch you next month.
Absolutely, Andy. Thanks everyone for watching, and I'm going to continue to tell my community about equities trackers. So thanks so much, and I hope you have a great one.
Thank you. Thanks, Brian. And we hope to catch you. Oh, I forgot to share some news with you.
Yeah,
We recently got our approval in principle with from the regulators to
congratulations.
yeah to set up our asset management. So yeah,
That's amazing.
we're happy with that. Took us a while, but we got here. Now we just have to get the business up and running.
Hey, little by little, especially if you can grow during these kinds of market conditions, it's the sign of a good company.
Yeah, thank you. So we will catch you next month, and thanks again for coming on, Brian.
Absolutely. Thanks so much,
Have a good.
Andy. Always a pleasure. We'll talk soon, okay?
Take care. Bye
Later.
bye.